If you're just joining us, you can ask questions in the chat box. We'll make sure we try to do our best to get to them before we end the show. I'm going to go with Jim's question, and he's asking what we're doing in our personal portfolio and our own investments. What are we doing? Are we looking? Are we waiting? Have we made any changes? And I can tell you what we're doing in our fund. I already mentioned that we're putting loans on pause right now. Mm-hmm. The ones that we're working through, I can tell you we're getting advanced interest payments that are part of the deal. So we're putting 3 to 6 months in advance payments in an escrow account. Mm-hmm. Plus we're lowering our LTVs. Yep. And they're going to be properties, and we've already done this, that are going to be affordable housing. Mm-hmm. And we made that shift last year to go to strictly the affordable housing market with loans in our fund. Those are going to be the safest. They're going to be the ones that can create cash flow if they're not currently, but they're also the easiest to move if you end up owning them, because the price points are low and everybody wants them. Yep. They're valuable assets. Mm-hmm. So I'm going to go around the horn and ask that same question to everyone. I'm going to start with Mike. Mike, what are you doing with your portfolio currently? What's your current strategy? And I'm going to say until you get better information.
Sure. So we're going through the entire portfolio. So one is a personal, the other one is obviously fund, but the exercise is identical. Is look for risky points. So what do we have in the portfolio we believe has exposure to these market conditions and to what extent? And essentially mathematically simulate a stress condition, assume things are going to go really bad, and just project, what's our exposure, what are our risks. And the main question is, what can we do about it? If there's nothing we can do about it, well, it's good to know that something is at risk, but with nothing we can do, there's nothing we can do. There are situations where we can obviously impact and make changes, and that's what we're looking for. We're looking for what's at risk and what we can do to improve. And then we're also looking, obviously, for the strengths in the portfolio. It's basically a review process. Go through everything, think through what you can do today, and obviously cost cutting. Where can we reduce risk, reduce costs as well? So cost cutting, increasing liquidity. We have pretty high liquidity at this point. So we have a lot of dry ammo, and we're actually very happy that we have about 50% of our flagship fund is in cash. And that's a lot of dry ammo, and that's been sort of preparation. We can't have too much cash in the bank. It burns a hole, in essence, because we got to put it to work. But at the same time, 15% in this market feels pretty good. So that's the key basic step. We're having conversations with a lot of our project sponsors and borrowers and understanding what's happening with their business, how we can help, what adjustments we need to make. There might be great opportunities where they need a little bit more liquidity. We can come in, save the project, which we already know, get a good return on incremental capital, and protect our existing investment. So that's what we're doing. We're analyzing existing portfolio because new deals are sort of frozen. So it's a time to look at what you got and how you can improve it.
Excellent. Thank you. Jacob?
We're just generally trying to be defensive, and we're trying to be more liquid. We're looking at more cost-cutting measures, not because we're out of money, but just so we can buy ourselves a lot more runway through this downturn. Yep. I mentioned it earlier, but we're focused a lot more on cash flow with new acquisitions. In terms of managing our existing portfolio, really our only problem area is our retail line of business. We're doing everything we can to mitigate that with rent abatement, cutting deals with lenders. But our storage business, as I mentioned, is not seeing any really negative effects from this yet. We're trying to acquire new acquisitions with long-term debt, so we're not up against a short-term maturity date, and we're trying to buy deals that aren't reliant on a low cap rate exit in a couple of years. Again, just more focused on cash flow. Personally, I'm not really doing anything different. We've got a rental portfolio of single-family residences and some storage facilities outside of our various institutional and private equity partnerships that we're holding on to. So not really doing anything directly different within our current asset base other than just trying to manage risk and really focus on cash flow and downside mitigation.
Excellent. Glenn, you're up.
Yeah, very good. Obviously what we're doing, we're in the affordable housing space, right? So it's business as usual for us. Now what we're already seeing, which is, we saw this in 2008 and I've seen it before. Prices are coming down fast. That's why the capital markets are freezing up. Fortunately, we have a lot of private investors that understand, that get it. And so, yeah, prices are going down. We're renegotiating some deals. And so from the business point of view, yes, we're tightening the ship. We're cutting all of our expenses and so forth. But no, I think everybody said it on this call, that cash flow is the name of the game. And, we think the cash flows are going to get better now because the prices are coming down. They're coming down pretty hard. So I think there's a real opportunity out there. I like what Chris said. I actually built my company for this because I knew it was coming, and of course I thought it was going to be 3 years ago, to be honest with you. So I'm late on that, but we just knew the chart said there was going to be some kind of a reset here, and yes, with affordable housing, I totally believe people are going to do two things. Number one, they're going to eat. Number two, they got a roof over their head. And when you have the most affordable roof, I feel like long term we're insulated. Like I said, short term there's going to be some bumps on the road with rents and so forth. So that's our plan.
Mm-hmm. So that was you, the guy on the corner in Fort Worth downtown with the sign going, "The end is near."
Yeah. No, that wasn't me. I always get accused of being the glasses. I have too full. That's what I was accused of. But no, obviously, none of us could have projected the coronavirus, right? Nobody could project that. But the charts were screaming for some kind of a reset or a pause or whatever. So, and that's kind of what I learned in 2008, to try to have kind of a strategy that works, whether it's good times or bad times. And rentals of affordable houses, I think, work in any market. So that's my take.
Well, all of us as a group, because we are in all the same masterminds, we have all been preparing for the last couple of years because we knew the market was kind of at the top anyway, and couldn't do anything but go the other way for a little while. You just need to prepare. You don't assume it's going to happen, but you assume it's going to happen. You just need to be in a position to weather it when it does. Fuquan, what about you? What are you working on?
Yeah, what we did in the last 2 weeks, coming back from the CG event, especially knowing what was eventually going to be the outcome that we're in now, things slowing down with all the talk that was out there. We've actually been, any projects we didn't start yet, we are in the process of, putting those projects out for bid again to other contractors who may not be working anymore, give them an opportunity to get back into, doing the job, and giving us an opportunity to get the open contracts we didn't start at repriced. And we shifted most of the focus to finishing up the rentals. Instead of, having a big crews at the flip properties, we moved those crews over to the rentals because we have, pretty much a waiting list for the subsidized apartments. So we're trying to just focus 100% on getting that done while everything's in a slow period. And we don't know what the flip market is going to be. As far as the notes, we've really been paying more attention to the 10 out of 12 payments, the people who's behind 60 days, trying to offer, something that's more affordable, trying to see if they've been affected. Really doing a lot of bar outreach and staying in contact with our attorneys, organically finding out, what's happening in the local market, what courts are closed, pretty much all of them now, but really just focusing on that, really. In my personal portfolio, I've been looking, because I can't buy notes that the company owns, so I've been looking for onesie, twosie notes that people may want to sell for liquidity. I'm doing some hypothecation. I've been on the phone with my bankers, trying to execute on the lines of credit that they've been trying to get me to do for the past 4 or 5 months. So just focusing on that, really, and just keeping up and making sure that I'm on phone calls and I'm over communicating with investors, and keeping my ear to the street on what's happening.
Mm-hmm. Great.
Excellent. Chris, what about you?
I kind of already alluded to it before, but, my personal portfolio, we've even pulled whatever little money we had in even gambling and Bitcoin in the stock market. We're pulling it out. We're getting it out into our hands. Liquidity has been the main thing, right? So like, for example, personal savings, we made sure we had, at least 8 months worth of expenses, that we could ride on for business and personal. Now, naturally, because I don't want that earning nothing percent in the bank, we got a good chunk of that in my life insurance policies and things like that. So it's stored up and it's waiting. But actively, there's still deals I'm looking for. So specifically, I'm looking at turnkey single family homes. I mentioned Glenn's stuff and, things like that. I've been looking at other funds for money down the road, as well with syndications, much like the funds that you guys have, that you guys are offering as well. And so it's really a matter of like, hey, I've got money sitting here. We got, worst case scenario, if income stops completely, we're good for months. We can weather this out and be fine. But we also got investment money over here as well. Another chunk that someone's going to be actively investing currently, getting some more cash flow, keep building that up while keeping more cash on the side of saying, all right, we see what's coming. Hey, what if these big box stores, all these malls and things go out of business? Are they going to start turning into self-storage? Cool. Is that what the direction we're going to start moving? It's just watching and just waiting in a lot of ways. And, like I said, it's a fun time right now. The one thing I know I'm not investing in is we're definitely not putting money in the stock market. It is not at the low. Whenever I hear people say, hey, we should dollar cost average, we should put money in now because it's at the low. It's like, that's the dumbest time to put it in. When have we ever had a recession where it dropped in 1 month and then recovered? Never. It takes a couple of years. So that's the worst time to put money in, but real estate, I think is still one of the safer places to be in right now.
Yeah. Agreed.
Well, God is only making so much more land, and it's not inhabitable very quickly. The volcanoes are what adds land, and it's going to take a while for those to be occupiable. So whether it, obviously residential is the most coveted, and, people always need two things, food and shelter. And so if you're going to invest in the stock market, do it with grocery chains.
yeah, no kidding.
Otherwise, keep it in real estate. So listen, I want to thank you guys for joining us. I do want to mention with the bill that was passed last night, I'm sure there's going to be some other changes made to it. So don't take the details you see and hear about right now to heart. There's going to probably be a few adjustments. Mm-hmm. And if you're in a position where you think these loans are all going to be forgivable and you can't afford to pay them back, don't get the loan because there's no guarantee they're going to be forgivable either. Wait till the details come out. And again, call your banker, get in the position. If you can get lines of credit and get liquid, I suggest you do that. You don't want to put it under the mattress, but at the same time, don't keep it in the same bank that gave it to you.
Yeah, no, great.
Anyway, that said, we're going to be doing this once a week for the foreseeable future to kind of give everybody an insight to what's going on in our world. Mm-hmm. Again, thank everybody for joining us.
And please leave comments, because as much as we want to give you an insight into our world, we want an insight into yours, and that's how we all grow and get through this together, is insight from both sides.
Oh, and don't forget to like and share, and subscribe. All right.
And hey, Bill and Jonathan, great job, you guys. Great job.
Well, thank you very much.
Thank you.
Thanks again for joining us, guys.
Yeah.
Thanks, guys.
See you next week.